There we go. So this is these double tops, like this candle here, that's a zone. This double top here, that's another zone. This double top here, I mean, this double bottom here, that's a zone. So you can see those and mark your charts up that way. Being that these zones are so close to each other right now, I'm not actually going to make them into zones. But what I will do is I will get my rectangle, which is right here. And from this wick, this top green wick to that red body is a zone. And I'm going to change that to red as well, because when the market gets into this zone here, it usually bounces back down. And I'm going to do the same exact thing with this red zone right here to this green body. And I'm going to change this to green because, again, when it hits this zone, it usually goes back up. So we try to keep this as simple as possible. Trading really isn't difficult. You know what I mean? It's about patience. It's about psychology. It's about seeing what the market is actually doing so that you can actually make decisions correctly in the market. So once I go from the daily and then the 4 hour, I go down to the 1 hour chart. And then you can see that the market looks a little different and a little choppy during these candles as well. So I'm going to look for double tops and I'm going to look for double bottoms so I can get highs and lows. And I can mark the chart that way as well myself. So I'm going to take this horizontal line here and I'm going to go to this top of this wick, this red wick right here, because that's the highest it's been in a while. And I'm going to change this to white. Now, this is what we call the equilibrium line. The reason why this is the equilibrium is because it goes through the market and sometimes the market stays on top of it and it also breaks through under it. So I know this is a vital zone for the market to be in. So right now, once I do that, I'm going to go down to the 15-minute chart. And the 15-minute chart should look a lot smaller, should look a lot more choppy. You should be able to see more lines. You should be able to see more double tops and more zones for yourself. And then once you see that, you'll be able to make more decisions on where the market is going to go and where it's headed. So right here, we can see this is what we call an imbalance. These three bearish candles right here, 1, 2, and 3, right? One thing you have to understand is that this zone right here is called a fair value gap. From this bottom wick to the body of this bearish candle is what we call a fair value gap. Now, one thing you have to understand about fair value gaps is that they have to come back into this zone so that they can fill this gap of this bearish candle over here. That's just rule of play. It just has to happen that way. Now, the question is when it's going to happen. It's going to happen. We just have to find out when, right? So right now, it looks like it hit this zone down here and it's, consolidated right now in Asian. So the idea is by the time tomorrow starts or New York session starts, it's going to climb its way back up here. And then once it climbs here, if it breaks through this is awesome. Then we know it's going to chase this red zone up here and then bounce back down. And then that's just the way it goes. And then for the 5-minute chart, what happens is this is where you find your entries because this is where you'll find the most volatility. This is where you'll see more action in the market. As you can see here, the candles get a lot smaller, but there's a lot more movement. So you can see everything that's going on within that daily time frame, that these are the candles that are moving consistently in the market. Now, I also watched this video on Akashex. It's called Elliott Waves. And the cool thing about it is it tells you about the market and it moves in 8 different directions throughout the process of a day. You just have to know where it is and what it's going to do. So right now, being that I watched that video, it's been helping me big time. So I can see that this looks like it was a bearish market earlier, and then it broke this high right here. So this bullish move to break this high basically would be wave 1, and then it came down for wave 2, and then wave 3 is usually the longest, and then right now it looks like it's on wave 4 for it to push back up for wave 5. Now, if that's valid, the cool thing is if it's going to push up for wave 5, that means it's going to chase this green zone up there. And then we just have to be patient. We just have to be patient to see what's going to happen in the market. So We just have to wait to see what happens right here because it's just consolidating. Now, when it comes to the 5 minute chart, this is where I enter for entries. And this is what I look at to see, how fast the market is moving, where it's going, X, Y, and Z. And right now, this is Asian session. I don't usually trade gold in Asian because it doesn't have enough volatility for me. But what I do believe is going to happen is that the market is probably tonight is going to keep dropping down, make lower lows and lower highs, and just keep dropping. And then by the time New York session opens, it's gonna shoot all the way back up. That's what I do believe is gonna happen. But this is where the patience comes in, the psychology of trading, because right now I can literally just enter for a sell if I wanted to, but I don't have enough information to know if it's actually gonna do that. Because the other thing that can happen is it can actually go up tonight to make higher highs and higher lows, do this, go all the way up, and then when it hits that zone all the way, that red zone, then it'll drop tomorrow. So once you have your chart marked up, once you have your chart drawn out the way you need it to drawn out with technical analysis, you can literally sit back and wait for the market to get to the zone that you need so that you can make a educated decision on where the market will go. That's literally what top-down analysis is. That's what technical analysis is as well. And then, you can also go back to like the hour chart and you can check for lower zones. So being that this has been the lowest zone that has gone in the last few days, you can also go a little further back. And you can see that this line right here is actually another low. And I'll change that to green because when it hits that, we also know that it goes back up. So the market always chases zones. That's just the way it works. So I can literally draw another box right there. And that'll be another zone for myself. But right now, I do believe the market is going to come back down here into this market tonight. And then in the morning at US Open, it's going to come all the way up, break through the equilibrium, which is this fair value gap right here. I'll change this to white. It'll break through this equilibrium here, chase this zone tomorrow. And then by the time Asian session starts tomorrow, then it'll do the opposite and come back down. And that's literally it. You guys have any questions about technical analysis at all? Noel, what's up, bro?
Yeah, one question after
Go
Laurel.
ahead.
That white line, the equilibrium, is that the same as the EMA?
No, the EMA is an indicator that actually, I can turn mine on. So that white EMA line that you see right there, there's different EMAs. There's a 20, there's a 50, and then there's a 200. This EMA is the 20. I like to use the 20 because it shows the movements for a short period of time and what's happening right now. And like the 200 EMA actually shows what the movements of the market is for a long period of time. But the idea of this EMA is when a candle breaks through it and closes on either side, like for example, this bearish candle right here, it closed over it. If it closes over it, that means the market is changing direction and it's going up for a bit. And then when it breaks through it on the down and it closes under it, it's breaking down and it's going down on the market. So this is the 20 EMA. You can change it to 20, you can change it to 50, you can change it to 200. I can actually show you that right now. Show you what it looks like for the 200. Move this box up the way. All right. So you see how the candle moved? I mean, how the line moved? This is the 200, and then this is the 50. Yeah. Let me see.
Reduce
So
the
right now, it's basically saying that the market is bearish. It's basically telling you that being that the candles are under it, that it's going to keep pushing it down, which is pretty cool until you see one of these candles break through it and close above it. Then it's probably going to break through, retest that EMA, and then shoot up.
Mhm.
And that's how the EMA works. Now I use the 20, like I said, because the 20 actually shows like the close movements and it respects this line right now. So as you can see, this candle is actually on the 20 right now. So what can actually happen is it can break through it, but this is a bearish candle. So we don't know what it's going to do right now. But if it broke through this and then it closed above it, then it's probably going to come back, retest that EMA, and then shoot back up for this red zone up here. Do you have an EMA on your charts?
Um, me?
Yeah.
I don't think I put mine on yet.
Okay. Yeah.
But now I know.
So the EMA either acts like a vacuum or it acts like a bulldozer. So it's either going to push the market down or it's going to pull the market up, depending on where it is. If it's under the candles, it's acting like a bulldozer. It's pushing it up, and if it's above the candles, exact. No, if it's above the candles, it's acting like a bulldozer, pushing it down, and then if it's under it, it's pushing it up.
Oh, that's why it's going. It's
Okay.
above the candles, so that's why it's going down.
Right. So that's why when we see the candles, this is on the 1 hour chart. So that's why when we see the candles like this one over here break through it and close under it, we know we're going to get a bearish move coming down. And then we see over here, it actually broke through it and came back into it. So danced a little bit. You usually want to see a breakthrough and a retest. So the best thing like this one here, this candle, you guys see this bearish candle, I mean this bullish candle right here, it broke through the white line and then it actually came down back into it and then it went back up.
Mm-hmm.
So you always want to see a break and retest. When you see the market break a structure and retest it, and it respects that line, it usually goes back in the direction it was headed.
Mm-hmm. Cool.
So another thing I want to talk about is the psychology. Everybody's psychology is going to be different. Everybody's psychology is going to affect them differently. It's going to hit them totally different. One thing I know about trading is that everybody is not supposed to trade all day long. That's number one. Trading is supposed to be a thing where you pick a session, whether it's New York, London, or Asian. You figure out what pairs you want to trade, and you trade during that session only. It's not meant to be traded all day long. This is something that you need to take serious because if you don't, it'll definitely cost you more than it'll pay you. Okay, education is a must. You have to learn this because if you don't, you're just sitting out here gambling at the end of the day. And I I know friends that are going through things right now when it comes to trading, who are losing more because they're not taking the time to actually educate themselves and think it's going to be a overnight success when it's not going to work out that way. I don't want to be like the bearer of bad news or anything like that, but this is definitely something that can make you rich. This is something that can definitely change your lifestyle. This is definitely something that you can do to change the means of what's going on in your life right now. But at the end of the day, you have to take a step back, realize what's going on, and you have to know what you're chasing each and every time you're trading. Because if you don't, that's where over trading starts coming. That's when a lot of losses start happening and things like that. When I say you need to know what you're looking for each and every trade, you need to know the amount of money you're willing to risk. You need to know the goal amount of money that you're willing to make, or you need to make for that day, and you need to know what the overall amount of money is that you're looking to make for the rest of the week. So if my goal is, let's just say it's $1,000 for this week, and I trade 4 days a week, I know I need to make $250 each session. But let's just say you don't make $250 each session and you make 200. You're still on pace to do what you need to do. You don't have to sit here and be like, okay, I'm $50 short on my goal, because once you start chasing that $50 when the market starts taking money back and saying thank you. You know what I mean? So I'm sure we've all been there. We've all had days where we've caught the market really, really good. We've fallen short of our goal, and I've done it plenty of times myself. Um, Actually, I'll tell a story about myself. I was $200 close to passing um, a prop firm challenge back in November, October, November, or November. And I told myself, I said, cool. I was $500 close at first. I made $300. I made way more than what I was supposed to make to hit my goal, right? Then I said, man, I'm $200 close. Let me just go get that $200 and finish the challenge. And I'll be a funded trader. I'll be good. I literally went back into the market. I still had my charts marked up or whatever. Everything was set the way it was. The market hit a certain zone that I felt like it was going to react a certain way, and it did the total opposite. Why? Because I hit the move that I caught earlier was the move that I needed for the day, and I wasn't supposed to trade anymore. But me being selfish, me being greedy, I guess you can say, me thinking that I have the market understood, got me messed up, because I went from 200 close to passing my challenge to losing 1,500, losing $1,500 and failing the challenge and having to buy another one. So again, like I said, I'm talking to myself when I talk to you guys as well. Like, I'm not just telling you guys things just because I just think I know what I'm talking about. You know what I mean? I experienced it all myself. So at the end of the day, when it comes to the psychology, this is going to literally tell you what type of person you are when it comes to trading. It's going to let you know, do you need to take a step back? Do you need to do a little bit more personal development? Do you need to, read a book? Do you need to do whatever it is? Like, it's going to really tell you about yourself. So psychology is a major thing when it comes to trading. Okay. I just wanted to make that clear. Now, after after I get my entry, let's just say I'm going in for a sell right now, right? I'm gonna delete this on. After I go for a sell right now, what I'm gonna do is I'm gonna click on my short position, which is this square right here at the top. You guys can see that, boom. And then I'm gonna come here and I'm gonna enter, I'm gonna click it right there. Now, this is how you find your take profit. This is how you find your stop loss. Now, being that this is gold and it moves very volatile, you want to put your stop loss at the nearest swing high, being that this is a sell. So this would be a tight stop loss right there. But we know we don't want to give it, we don't want to give it, we don't want the market to go here, number one. So I'm going to move it a little higher to give myself some space. So the highest I'm going to go is right there because of this right here, right? Now, let me get this circle real quick. Now, this is circle right there. So you guys can see. That's the last swing high. If the market goes past this and breaks through this, my analysis is probably wrong. So that's why this is the zone for my take profit. I mean, for my stop loss. So that zone is right there, right? I'm going to go a little higher to give myself some space, which is this zone right here. And remember, I'm looking for double tops and double bottoms. Those double tops are zones. So I give myself some leeway of this zone and come back over here to this double top. So that's my stop loss right there, right? So my stop loss is 2031.29. That's how you know what it is. Right here on the right, where the price is at, where it turns red. It's red because this red box right here is signifying this. Now I'm going to come down here. I'm going to drag this box until the middle of the box where it says risk to reward ratio says 2. And then when that says 2, 1.99, whatever it is, over here on the right, that's your take profit, 2016.15, right? That would be my take profit. So when you go into your trade and you enter for a sell, your take profit is going to be 2016.15, and your stop loss is going to be 2031.29. And then you sit back and wait and see if your trade is going to hit. Now you can either set and forget and like literally let it do its thing, or you can literally sit there and monitor it and see what it's doing. If it's doing what you need it to do, you can exit with profit before it hits your take profit, or you can leave what we call a runner. You can take half the profit and then let the rest just run. Okay. Now, if I'm going in for a buy, I'm going to take the same one. Well, not the same one, but the long position one. And then I'm going to come here. Let's just say we go there. Now, being that this swing low is so close, I'm going to look for the next low, which is right here. All right. So I'm going to drag my stop loss down to that wick. And then I'm going to drag the green all the way up until it says 2. And the same thing applies. All right. So my stop loss is 2021.14. And then my take profit is 2036. And then you can either, like I said, set or forget, or you can let it rock. Now, once that's done, you let the market do what it do. If it goes in your direction, you don't have to analyze anything. But if it doesn't go in your direction, you literally want to come back, figure out what happened, and see where you went wrong at. Because everybody, might make one mistake, might not see something that they see when it's actually happening. And you can literally see more what's going on the 1 hour and the 4 hour time frame. And right now, it looks like, to me, that the market is tomorrow is definitely going to come back up, fill this zone right here, this fair value gap, or this order block, and then chase this high just to come back down. That's what it's looking like. So it looks like it's about to start the wave of wave 1, which is pretty cool on the Elliott wave theory. So that's literally all I got, guys. If you have any questions, please feel free to ask.
Would you go in for a buy? Seeing what it
Say
is,
that
seeing what it looks like now, would you go in for a buy?
right now, in Asian session, being that it's Asian session, and it looks like it's going for a buy, I personally wouldn't, because I don't trade Asian. I mark up on Asian. So all this stuff that's happening right now is me just preparing for what's going to happen tomorrow morning. So if I wake up at 7:30 in the morning and I see this candle actually come from this point and it's down here, if it's respecting this green zone, I'm definitely getting in for a buy. But if it breaks through this green zone and it keeps coming down, I'm actually going to wait a bit, because what's going to happen is it's probably going to break through it. It's going to retest this green zone, respect it, and then keep coming down. And I'll enter on this retest right here.
For a buy or a sell.
Or sell. Now, the only way I'm entering for a buy is if I wake up at 7:30, 8 o'clock, and these candles come down here in this green zone, and it's not breaking through this green zone and it's respecting it, then I'll get in for a buy. And then, ride the wave up. Okay? Because usually during Asian session, gold usually consolidates. It usually just plays around in one area, and around 5:30, 6 o'clock in the morning, it'll make sudden moves. And then once it makes that sudden move, you kind of see where the market is headed. And then you know what it's going to try to do for the morning session. Because what it does pre-market, it usually does the opposite during open. So in pre-market, if it comes down here, it's usually going to go up throughout the day. And then pre-market, if it goes up, it's usually going to come back down throughout the day. And you can also tell what's going to happen by going to, let me Go here real quick. Yeah, by going to Forex Factory. Now, today is Monday. Let's go to tomorrow, Tuesday. There is at 12 noon, which I don't usually trade gold at noon anyway. There's some news on the dollar. But other than that, the market is clean tomorrow for gold. So whatever it's gonna do, it's gonna do. Like being that this FMOC member Mester speaks, is not gonna have too much, it's not gonna have like a crazy volatility, but it's gonna have some volatility happen during this time at 12 o'clock. But if this candle, I mean, if this folder, couldn't even remember the word. If this folder was actually red, then you'll see a drastic blast in the market. But being that it's orange, there's going to be some volatility or indecisiveness, meaning it might consolidate for a bit. But throughout the whole day, trading gold should be good. And whatever direction it's going in, it's probably going to keep going in that direction for the day. And you always want to check Forex Factory before you do anything, because this is going to let you know what's happening with the pairs that you're trading. And another thing that you guys can check out as well, this one doesn't have it. Let me go to a different pair. Hold on one second. Let's just click on. All right, this one doesn't have it either. Click on UJ. Okay, so I guess because it's not US open, but down here, there's usually circles, like you can see. Well, let me see if GJ has it real quick. No.
On the 4 hours. On the bottom.
What are you talking about? Yeah, they have that, but that's not the one I'm talking about.
Oh. My bad.
So this lightning bolt at the bottom gives the latest updates, but usually when USD pairs or anything that's affected by that, it'll be an American flag that'll show the news. And the flag will pull up just like this. Like once you click on it, it'll pull up just like this, and it'll show you the things that's happening in the market, or show you what's happening with your pairs. And it'll let you know, it'll kind of let you know where the market is gonna head for the day. So that'll be another thing that you guys can click on TradingView as well. But I'll just go back to gold. And another thing about gold, guys, gold is not a forex pair. It's a commodity. So it's going to move with a lot more volatility and action compared to everything else. But you have to realize that the analysis that you do for gold, you can do for all pairs. So the technical analysis that you're doing for this, you can do for anything else. And usually they will pay the same. Not pay the same, but they'll react the same. Now, with gold, 10 cent, like a 0.1 is technically $1. A 0.01 is technically 10 cents. And a $1 lot is $10 when it comes to placing. So that's why when you see a lot of people put $1 one lots in, and they have, you know, big moves in the market, and you see bigger payouts, is because they're technically betting $10, not $1. But if you do a one lot on like USD JPY, Euro USD, you're betting $1. So those are the differences when it comes to the lot sizes as well. So most likely you should be dropping for now. Yes, no, I believe the same thing. So Noel said he thinks the market is going to drop for now. And I do believe the same exact thing. And then once it drops in the morning, I do believe it'll be bullish again. How do we enter trade alerts, and which ones do you take? How do we enter trade alerts? What do you mean by how do we enter trade alerts, Adriel? Oh, how do we enter them in MT5? Okay, that's actually a good question. Let me log in here. I'll show you guys real quick. What's the code? Zoom.
I'm gonna check my mail. Hmm? Hmm.
I'm connecting my phone right now, and then I'll show you guys how to do that real quick.
Recording in progress.
All right, give me 1 second. Okay, I should be able to see my screen now. And then boom. Let's just say, all right, go to trading view. So let's just say this is a gold call out, right? This is on a 1 hour chart. I'm just using random numbers right now, okay? Let's just say they said get in for a buy when the market hits this zone here, and then, all right, so the take profit for this is 17773.0, and the stop loss is 17522.0. What happens is now you go to MetaTrader, you click on gold, you click on trade, and right there where it says stop loss and take profit is where you enter the stop loss and stuff. So I'll go to stop loss, a random number is gonna pop up. I'm gonna delete it. I'm gonna go back to trading view. Stop loss is 17522. So I'll put 17522. I'll click on take profit. A random number is gonna pop up. I'll delete it. 17773. Then I'll put 17773. Hit the screen, and then I'll click buy. Once I click buy, it'll enter me on the trade. Your take profit and stop loss are entered, and you don't have anything to worry about. So that's how you enter it on TradingView. I mean, that's how you enter it on MetaTrader, and then you're literally set from that point forward. This is an actual live account, so I'm not going to hit buy, but let me actually go to. This is a fake my demo account. I'll go on gold, click on trade, stop loss. My bad, that was Nas 100. This is gold. $20.31.96, 20.31.96. I'm in the stop loss, and then No, 2031.96 is take profit. Then my stop loss is 2021.30. Then I'll click buy. Do you accept? It's gonna ask you if you want to reject this trade or accept it. Click accept. And now you're entered for the trade. And then you just let it rock out. So I'm actually gonna let it sit here and rock because it's demo. I don't care if it wins or loses, but this is the example on how to enter a trade when you get those trading alerts from Akashex and the educators. This is what you actually do to enter it. Now with tap to trade, it's totally different. The only thing you're gonna do with tap to trade is actually just click accept, and your stop loss and your take profit is already set. And then once the market hits the area that the educator said is going to hit, it'll enter you in on the trade. And then you just sit back and wait for profit or if it hits stop loss. So that's literally it. No problem. No problem. Any other questions, guys? All right, so that's basically it, man. We're gonna do this again next week. Make sure we get more people on. We're gonna be I don't know what we're gonna be talking about next week yet, but I'll figure it out. And any more learning things, any more things that you guys want to speak on or talk about, you could just text me or let me know, and then I'll make sure I'll add it to the conversation next week. All right. I'll definitely talk to you guys later.
Cool.
No problem.
Later.